The US debt is set to explode, and it's all because of Jerome Powell not wanting to lower interest rates. And Donald Trump seems to have known that this was coming for a very, very long time. And this is why that they have been odds. So today I'm going to reveal why Donald Trump has been basically calling out Jerome Powell on a daily basis in the news, and why maybe Jerome Powell has been, I guess, A-okay on that. Now let's dive in and let's look at the facts first, right? Today, the Treasury announced that the U.S. Treasury is going to borrow $1 trillion in one quarter and 590 billion in Q4. That leaves for another $1.5 trillion in the next 2 quarters. That's absolutely astronomical, especially when, let's look at it, the US has $37 trillion worth of debt. Now, this is a very significant portion, as we've had the Doge clock up here, right? Everybody's been looking at how much money can the taxpayer save, all these different questions on whether or not the debt was going to be an issue or if it's controllable, right? It's up 52% since 1960. These are the US to GDP federal debt ratios. Now it's at 123.21%. That is not going away. So the US Treasury raising its third quarter borrowing forecast to $1 trillion due to lower beginning of quarter cash balance, projected lower net cash flows, and new forecast. Well, it's alarming, folks, because I think that we're going to start to see this really start to unravel and play, right? Donald Trump has been looking at the tariffs as something that could potentially bring in more revenue, right? He's been saying all these things, but it's been the ever looming issue where the US has a bunch of debt that they're going to need to refinance here very, very quickly. So if they're not going to refinance it today or yesterday or what have you, well, they're going to do it soon, and they need to do it within the next 2 quarters, I believe. And because the next, 2 months, I believe, at the end of this month, they're having to refinance. And so because they're going to have to do that, Donald Trump has been pushing Jerome Powell to keep interest rates lower. But nothing slows this train down, as McLovin is saying in the chat. And that's all because we're going to see the difference in cash flows coming in. Excluding the lower than assumed beginning of quarter cash balance, the current quarter borrowing estimated is $60 billion higher than announced. The estimate stated that 509 billion. The U.S. Treasury also noted that 65 billion from April to June in its April forecast. The department announced that the Treasury would expect to borrow 514 billion in the second quarter, with a cash balance of 815 billion. And as the media is saying, his war with Jerome Powell is far from over. They've been essentially at odds, right? He's been calling him too slow, Powell. You need to cut interest rates because, not cutting interest rates is going to cost the U.S. government billions of dollars. Well, I think Donald Trump knew the whole time that this is going to be a potential scenario. He knew that with the tariffs and with all of these different things, we're going to start to see some of these effects coming in to roost. And because of that, we're going to need more inflows, right? If you're cutting a bunch of tax balances, you're cutting all these different things. Well, we need to make sure that we have the money coming in and we have the money available. And if we don't, we're going to need to borrow. And so that's what Donald Trump had to do, was borrow. The campaign bend the independent central bank to his will out of straight brute force, right? So, a temporary distraction, allegedly. Trump's visit, footage of Trump and Jerome Powell fighting were kind of going back and forth. And he's been pushing and he's been unhappy with the Fed Chair Jerome Powell about the interest rate environments, saying he's a, quote, numbskull, stubborn mule. They've largely focused on the decision to keep interest rates high as part of an inflation fighting campaign. But why is Jerome Powell and what does the Federal Reserve do? I mean, this is just a really basic aspect of it, but Trump is unhappy with the Fed's decision to leave rates stable for months. He's argued that inflation is already low enough, right? He's argued that because they need to refinance all of these debts, we're going to see more and more costs coming in. But Powell has defended that, right? I am actually of the likelihood with Jerome Powell here. And if you look at this, here's the summary table for what would potentially happen tomorrow. Good old ChatGPT helping me out here, saying that, hey, if there's no rate cuts tomorrow, debt will still rise to about $2 trillion a year. Potential extra will be 400 to 500 billion in long-term interest cost. There would be a slight relief in net borrowing if they cut, and lower interest expenses and smaller cumulative debt. So it would be, 400 to 500 billion dollars over the next 10 years. Granted, right? This is interesting because with the 400 to 500 billion savings, it is over that 10-year period. We are still getting $2 trillion more in debt literally every single year, right? So this is something that keeps snowballing and keeps going quicker and quicker, right? So this interest rate cut could help and would help just slightly, but is that significant enough? And are we out of the woods with inflation yet? Now, if you look at the Dixie, it looks like the dollar it actually had an outstanding day today, up over 1% in an entire day. You honestly don't see 1% moves and swings like that when it comes to the US dollar, right? So, an outstanding day on a big news of the US actually announcing that it's going to borrow a bunch of money, which is very interesting. Why is the Dixie shooting up like that? Well, maybe they think that they're going to use all of this money very soundly. Maybe they realize that, hey, in the next 2 days, there's only a 3% chance of Jay Powell actually cutting interest rates. So he's going to keep it and try to fight inflation by keeping interest rates high. Those are two different factors. Those are two completely opposite ends of the spectrum. And I firmly believe it's the first, that everybody realizes, hey, Jerome Powell is actually trying to fight inflation with all of this. And I think that people are realizing, hey, you know what? Trump really is a market guy. He wants to see the markets thrive. This is really what he's all about, right? He knows that the boomer generation, the later generations, they look at the S&P 500 as an aspect of how the economy is doing, even though we've covered multiple times on this channel that the market doesn't always correlate with how everything's going. We could definitely have a melt up, and I think we're going to have a huge asset bubble here, right? And the S&P 500, was relatively flat today, even though we had the US Dixie shoot up, right? So with this actually shooting up the Dixie 1%, the debt increasing by as much as it has, well, this is something that's been an issue. And the biggest issue is what we got right here, the US debt to GDP ratio. I mean, at 123%, that is insane. All Nighter Hider saying the national debt isn't the problem. Entitlements are, in his opinion, the domestic slice of the debt. I agree. I mean, you could break down the GDP as well and say, hey, you know why the GDP got cut so much is strictly because of the Doge clock. So that US debt to GDP ratio isn't exactly as clear cut. McLevin said, if I had a ton of fiat debt, I would want it devalued too. Hey, man, I agree to that. Make sure you guys are smoking that like Cheech and Chong. And cutting spending is not going to happen, right? I mean, I keep saying this all the time that, the U.S. government isn't going to have a problem finding money, right? I mean, look at what just happened. They have issues finding money, or they have tightness. Trump is yelling at Jerome Powell, cut interest rates, cut interest rates, cut interest rates. Jerome Powell doesn't do it. Poof, magically, by the end of this year, they're going to have $1.5 trillion more that they're going to be able to borrow and get into more debt for. So the U.S. government being able to find money has never been the issue. In fact, they've had more money come in every single year since the year 2000, maybe even before that. But I know for a fact since the year 2000. So every year, if what they get coming in is more and more, but we get in more and more debt, seems like we got a bit of a spending problem. He's saying that Luke Groman has mentioned that the Western investors expect prices to fall in a collapse, not melt up. The average investor. Yeah, I mean, I agree. I think that the prices are going to melt up, and that's what we're seeing, right? I mean, like I said, the Dixie, you really don't see 1% moves like this. This is where it's getting a little interesting and a little hairy here. Like, you know, seeing it shoot up like this, I imagine we'll see sort of a correction tomorrow from the Dixie, but of course I'll be bringing it to you guys live, so we'll see. But I wouldn't be surprised if the Dixie comes, slightly flat tomorrow. And we don't really see these big of a shoots up. But I mean, like all these memes under here, right? I mean, everybody's just going to go speed running the fiat endgame. The dollar money printer is going to be going burr. I mean, it's just, as McLovin said earlier, it's like nothing stops this train. And I know Lynn Alden, coined that term, but it's lining out. The thesis is playing out here, where I think we're going to have an asset bubble. Everything's going to melt up. You're going to see everything from Bitcoin to gold to S&P 500 to tech stocks. All of these things are going to shoot up as everybody's going to be fleeing away from the dying fiat currency. There's obviously going to be some assets that do better than others. And, as you guys know on this channel, I'm a huge proponent of Bitcoin, as I think it's the hardest asset on the planet. But that's beside the point. The thing that we're talking about here is that the amount of debt that the U.S. is getting into is the huge issue here. It's the absolute big problem. And no matter what, right, we had Doge come in and cut a lot of spending, but it seems like that movement is somewhat over. And we need to be keeping a very close eye on all of this. And as you guys are smoking that like Cheech and Chong, you guys need to be hitting the subscribe button for me as well, because I'm just over 250 subs. And I know 90% of you guys that come in are not subscribed. So I appreciate you guys coming back, but I would love you guys to subscribe to help me get to that 1K subs, because this debt problem, the borrowing, in one quarter, $1 trillion, that is absolutely, that's like 3% of the US debt in one single quarter being added to it. JDK saying about 20% of people on OASI don't need it. The big spending is mainly OSI and defense. Yes, exactly. And the interest payments are a bit ominous. Maybe it's nothing to worry about. Yeah, I mean, I agree. Maybe it's nothing to worry about. I'm not sure. But the lowering of the interest rates, all I know about would help lower that. They would devalue the actual currency by doing that, though, and adding more liquidation. And as we all know, when you add more, the M2 money supply shoots up. Well, it just all flows into assets. So Trump's rich friends get richer, and that wealth gap widens, right? But the reality of all of this is that, those tides lift all boats. So, yes, they don't need that for retirement, but assets and more money being piled into businesses potentially could lead to more jobs. I mean, it's a really tough situation here. The high interest rates, I don't think we're out of the woods with inflation. I mean, even if you look at the Dixie with a 1% swing on a day, right? We're still at 98.6. So comparatively to all of their fiat currencies, the Dixie strength is still somewhat down. So we aren't really seeing this skyrocket up, right? We're going to see some more issues here, right? So I think that we're still struggling with all of this, and we're going to continue to see this, see inflation need to be tamed. So although the narrative is Jerome Powell is too slow, I really do think that keeping the interest rates high, especially tomorrow, or on Wednesday, is going to be a good move. And I don't think we're out of the woods with inflation. So make sure you guys are smoking that like Cheech and Chong. There's a ton of things to cover here, as the next 2 days are going to be very, very interesting. So I'm gonna keep it short and sweet here. I appreciate all you guys. JDK, thank you so much for being new and joining the chat. All Nighter Hider, McLovin, thank you guys for coming in the chat, and I'll catch you guys all at